Okay. All right. So welcome to navigating the sales tax and use tax minefield. Um, it is a complicated uh, set of laws out there in all the different states in our country, and they're all different. And so we're going to talk about most of the normal ones, or the ones that are most often out there. There are some exceptions in some of your states, and I can't address every one of those in this webinar, but we will talk about how you can find out what the laws are in your particular state. So to start with, did you know that that most of you could save your company around 2% net profit through proper and legal sales tax policy? Now, when I make that statement, that is for people that are in use tax states that are not currently taking advantage of use tax laws in those states. Okay. There are, just so you're aware, there are 4 states in our country that do not have sales tax or use tax at all. Okay. I think that's just for your information: Montana, Oregon, Alaska, and New Hampshire, I believe. So if you're in those states, this is not the thing for you. I would assume nobody's from those states. There are 8 states that allow only sales tax to be charged and remitted in full on jobs. Okay. Most of those states are sales tax on materials, not labor. Some of them are sales tax on the whole job. Okay. But that leaves 38 states. And so the remaining 38 of the 50 do have at least some of your jobs that you're doing right now that have a use tax application or use tax law in place right now that you could take advantage of if you're not already. Okay, so we're going to talk about some of those things right now and how you might be able to use the use tax law if you're not already doing so, be able to use that to your advantage for your business. Okay. Just for your information, the average pre-tax net profit in the floor covering industry the last 3 years is averaging around 4%. So if you could add, even 1%, 1.5%, 2% of net profit to your bottom line through proper use tax application, that should make this thing very important to you to listen to and to seriously consider if you need to change the way you're applying sales and use tax in your business. Okay. All right. So let's get into it here. We have we're going to first of all talk about sales tax. Sales tax in just a normal cash and carry type business, item in, item out, retail situation, you have sales tax that is charged and remitted on all material only sales. Okay. That's the way sales tax is applied, and that's just a normal sales tax situation. And the sales tax is applied to the retail price of the materials. So whatever you charge your customer for those materials, that's what you charge the tax on, the sales tax. Again, some states you're charging it not just on the materials, on the price of the materials, but also on the whole job. Okay, so we'll talk about that. Sales tax is accrued when your customer receives the material. Okay, so if they come in, buy something, they take it with them right away, that's when the sales tax is due, or it accrues to be paid. Okay. So let's look at the other situation then, a use tax situation. Most states, most of the 38 states that do have use tax, I think it's 26 at last count, 26 of those states allow use tax on all installed floor covering. Okay. So some of those states, you can see here the use tax is accrued by the business. So it's not charged to the customer like it is in sales tax. Use tax is accrued by the business on all applicable installed sales. Okay. Use tax is applied to your cost of the materials. Okay. So what this means is not what you charge the customer, like in a sales tax situation, but what you paid for the materials that you are using on that installed job. That's what you pay to your state, okay, for use tax. All right, and then the use tax is not accrued at time of sale. It's accrued when you install the material, okay? So you can delay paying that tax or accruing that tax until the installation is done. And again, that just goes back to the idea of when you use the material, that's when use tax is due. That's the kind of part of the definition of the word use tax, is when you use it, okay? Some states only allow use tax on hard surface installations and not carpet, okay? Some states allow use tax to be applied on residential jobs, but not commercial jobs, okay? And some states allow it on remodeled existing real estate, but not on new construction, okay? So there's a vast array of different types of jobs or types of materials that you install in jobs. In different states, they look at those things differently, okay? And so you need to make sure you understand what your state's particular laws are. Just for your information, we have done research on all 50 states' sales tax laws. We haven't done it recently on all 50 states. It's been, years ago when we did this. So some of the states could have changed, okay? But we at least have a basis for at least pointing you to where you might look or research to find what your particular state's laws are, okay? If you want some help with that, we can guide you a little bit, but we are not giving you any official legal opinions on any of those things. We would suggest that you consult an attorney, not a CPA, okay? Unless it's a CPA that is used to doing sales tax in this industry, okay? Because CPAs receive zero education on sales and use tax when they take their tests. It's all income tax, okay? So they never even look at sales or use tax applications, and some of those laws can be pretty involved, and so I would recommend you consult an attorney, okay, to see how you officially do it in your state, okay? All right, so I think we've got all of the stuff I wanted to talk about there. Are there any questions that we have so far, Chad? Okay, so no questions so far. All right, so let's go to the next slide here. You'll notice this tip down here. When you are thinking about doing use tax in whatever state you're in, we recommend that you have all of your vendors charge you sales tax, or none of your vendors charge you sales tax. Try to get it so that either all or nothing is charged to you, okay? Don't allow yourself or allow your vendors to mix it up, to allow some vendors to charge you tax and others not to, okay? Because it just makes the calculations of your tax at the end of your month or end of your quarter when you have to file your tax returns, it just makes that so much more difficult because you have to make exceptions to the rule and you have to do manual calculations. Okay, so I would highly recommend that you get all of your vendors to either charge you tax or none of them to do that. Okay. Some states say that they require it, that they require you to have your vendors charge you sales tax. So look, if you're in one of those states, then you'll probably want to, make sure that you have all of your vendors charge you that. Okay. If you're not in one of those states, we actually recommend that you have your vendors not charge you the tax. Because of that, there's a huge advantage in delaying or deferring that use tax liability until the job is completed rather than when you buy the material. Okay. And sometimes that can be a long time. Okay. All right. Yes.
Do some states charge sales tax on both material and labor?
So yes, there are some states that make you charge your customer sales tax on both material and labor. Yes, there are. We have a list, kind of the ones that we think that are in that situation. I do know that I think some of the Northeast states are kind of notorious for that. I know that in Texas, if you do a commercial job, that's the application that you charge sales tax on the whole job. So yes, there are places where that is the law, and you have to do it that way. Okay. All right. So let's look at the different types of the way that you perceive yourself and the way that the state that you're in perceives you and your business is extremely important in the way that you apply sales tax or use tax laws. Okay. And in most states, they actually define you as a retailer, or they define you as a contractor. Okay. Most of you yourselves think of yourselves as a retailer, I bet, right? Because that's what the industry calls you. Okay. And everyone inside and outside of the industry thinks of you as that and calls you that. So what does a retailer do? Okay. A retailer charges sales tax primarily. Okay. They charge sales tax on material only. Some states tax everything, just like we talked about. That was the one question we just had. Some states tax installed materials depending on the type of material being installed, which I've mentioned. And some states tax installed materials based on the type of building in which it is being installed. Okay, so these are, retail type situations where you're charging sales tax to the customer. Okay, as opposed to a contractor. Okay, if you are installing materials, and when I say you, it can be your business. Customer comes, buys materials from you, and wants you to set up the installation and install the materials. And whether you do that through an employee installer or whether you do that through a subcontractor installer, it doesn't matter. You're the one arranging for that material to be installed. Okay. And so what that means to the government is you, the business, the floor covering business, you're the one that's taking what the government calls tangible personal property and attaching it to real property. Okay, that's what contractors do. When you take a roll of carpet or a box of tile and your installers representing you go out and attach that material to real property, you are converting that from personal property to real property. Okay, and when you do that, you're acting as a contractor. Make sense? Because that's what contractors do. When a contractor does a job for someone, do they charge you sales tax? when you have a contractor come and do work for you? No, no. They buy their materials. A contractor will buy the material most times. They will pay sales tax on their cost of materials, right? And then they mark up the materials and labor and charge you a total price for the job, right? That's a typical contractor type of job. And you're doing the same thing as a floor covering contractor, retailer contractor, okay? Since you do the same thing as other contractors, in those situations, you should be considered and consider yourself a contractor, okay? So when you sell materials out the door, you're a retailer. When you sell materials with an installation contract combined with it, then you're a contractor, okay? And you need to think of yourself as a contractor and tax your jobs as a contractor, okay? So what a contractor does is he attaches personal property to the real property, all right? And he doesn't charge the customer sales tax. He pays the cost of the sales tax to the hardware company, right? When he buys materials, a particular contractor. In this case, you're going to, pay sales tax to the vendor, or you're going to have a sales tax certificate with a vendor that doesn't charge you sales tax, and you're going to pay use tax at the end of the job when it's all done. Okay, so that's what a contractor does. And most states also are becoming, and more states are becoming destination based. Okay, what I mean by destination based is when you go install a job somewhere, if you're in a destination-based use tax state, you will be paying use tax at the location where you're actually installing those materials, the city that you're installing those in. So think of yourself and where your store is in your particular city, and if you do jobs outside of your city in other cities, or maybe a county that might have a different sales tax rate in those places. If you're in a destination-based state, you should be accruing use tax and paying use tax at the rate of the places that you are actually doing the installations. Okay, so I'm gonna flip over to Q-Floors real quick so that you can see all of these things that we just talked about. Okay, so number one, I'm going to show you how we set up Q-Floors here. In the sales tax setup screen, you can set up Q-Floors to be a use tax application. You can do this by location if you want to. If you have multiple locations, you can do it that way. But if you do a use tax application, Q-Floors will automatically charge sales tax in a use tax application when there are material only line items on that order. As soon as you put any labor line item on an order, it will immediately flip to a use tax application. Okay. You can also set up one here for sales tax on materials, but not labor. So if you're in a place where you want to charge sales tax, or you're selling a particular material that has to have sales tax, like carpet in some states, you can have this particular sales tax option chosen, and then it will Q-Floors on those jobs that are in that type of an application will charge sales tax on material only, on the material lines. But if you have labor lines, it will still just charge the sales tax on materials. It just disregards the labor lines. And then we also have an option here for sales tax on materials and labor, so it'll charge it on the whole job. Okay, so those are the different applications. So if you're in a state that has differing applications based on the type of material you're installing, or the type of building you're putting it in, or the type of job you're doing, then you can have multiple setups here so that it will so you can choose and apply the proper sales tax application for that particular job. Okay. All right. And so the way that works in QFloors is when you have those setups and you come and hit the new button here, it's going to pop up this type of job screen that allows you to choose, what type of installation you're doing, what type of job this is, and it will apply the appropriate tax that we've set up in the system for that particular job. Okay. Now, if you're in a state where they apply, let's say they apply sales tax to carpet jobs and use tax to all of your hard surface. Okay. If you're in a state like that, you will have to have two different setups like you see here. And if you are selling a customer that has both carpet on the job and hard surface on the job, you really should and need to in QFloors separate those into two different jobs. Okay. So that you're applying sales tax to the carpet job and use tax to the hard surface job. Okay. You have to split them up that way. You can't put them on the same invoice and apply different taxes to those two different types of materials. All right. So just so you understand that. And then, when you choose one of those, let's say this is a carpet one, we hit OK, and then it will start your job for you. Now you can fill out the invoice. Okay. If you ever apply it incorrectly, if you apply the wrong tax when you start a job, you can always click on this box right here and it will pop up that screen for you again so that you can reselect the proper tax. Okay, proper tax type. All right, so that's how it works in practice in the QFloors program when you actually want to apply different kinds of taxes. Okay. All right. The other setup window that I want to show you, we talked about the destination-based things. We have this under File, Preferences, Sales Tax Table. You have the ability here to put in multiple cities, and you can split out the rates into city, county, state if you want to. And you can even apply tax types to those different cities. Let's say I know some states have cities that want to apply a use tax and some that other cities that don't. So you can be specific about which cities apply which taxes by choosing it right here. But you can put in all the different rates, and then by having these different rates in here, and you can fill these out one at a time, or if you want to just import, let's say you do stuff in 100 different cities, maybe, pretty big store, you have multiple locations, you can go ahead and do that in, hold on, somebody's calling me. Okay. You can import a sales tax table from your state that will fill in all of these things without you having to manually type each one of them in. Okay, so keep that in mind. And if you have these cities in here for any city that you might be working, when you start filling in a job here, let's just do this. And you come down to these cities in both the sold to, right? You can choose these cities off of here. And especially when you come over to the ship to city, you'll want to select the proper city here so that it will apply the tax to that appropriate city in the sales tax report at the end of the period, end of the quarter, when you need to report it to the state. It will separate and subtotal all of your sales and the appropriate numbers of those sales by each of those different cities and states and counties. Okay, so that's how you apply where the destination part of this particular part of the program, right? Okay, does that make sense? Any questions about that, how you set it up in Q-Floors. If any of you have, if you're unsure about what your state's tax laws are, it's probably best to assume that you're in a use tax state, or at least part of your jobs are use tax, because the vast majority of the states in our country are use tax states. Okay, and if you're not using use tax in one of your setup screens, and you're not sure if you're in a use tax state, you might call us first, and we can at least guide you and say, yes, you are in a use tax state, so that you can then at least research with somebody and ask questions about how you apply use tax in your particular state. Okay, so we can help you, at least guide you there, but again, it's not legal representation. We don't want to have any liability in telling you, because we're not attorneys here. Okay, all right, so that's that part of the program here. Now, I want to just show you, I started off with how to save 2% net profit, right? I'm going to show you how that happens on a use tax job versus a sales tax job, okay? So we'll take a look here at two different kinds of orders. Now, this is, again, you're only going to save this money if you're in a use tax state or on a use tax job, and you're currently not doing use tax, and you can and should be doing use tax, then you can save this money. And I'm going to show you how that happens here. Okay, so here's a typical retail sales order. Okay, you have you're charging $700 in material, $300 in labor. Okay, and you've got a subtotal of $1,000. 7% tax, $49, gives you a total invoice of $1,049. Okay, and the profit on that job is $400, because you've got $400 cost in material, $200 cost in labor, so your total cost is $600. 1,000 minus 600 is $400 in profit. The 49 of sales tax just is a pass-through. You're just charging it and then remitting all of that to the state. So that whole amount is a cost. Okay, and so you've got a profit now of $400. That's a 38% margin. Okay, so on the other hand, if you do a use tax job, and I'm giving it to you as a lump sum contract, there are many states that, and I can list 3 of them, but 3 of the biggest states, Florida, Texas, California, all require you to do lump sum contracts if you want to use tax as opposed to sales tax. Okay, and so that's why I'm going to show it to you this way. Now, in Q-Floors, all of you know that you can do details on your line items so that you can see what you're charging and what the profit is on each line item. But then when you present it to the customer, you're just going to show them the totals at the bottom, right? And so we have of course, you know, with Q-Floors, you have the ability to present the invoice to the customer any way you want, right? And so if you just give them the invoice with the subtotal of $1,049, that's the way this would look to them. You got $1,049. There's no sales tax on the job because we're doing a use tax application, right? So the total of this job is $1,049, just like this one over here. Bottom line total. Customer pays the same amount. Okay, but as you can see over here, same costs, except for the sales tax is only $28 because it's 7% of what? Of the material cost, not of the material retail, like over here. It's the material cost. So that's only $28 in use tax that we owe. Okay, so that gives us a total cost of $628. You minus those together, gives you a profit of $421 on $1,049. Well, that's a 40% job. Okay, So that's how you can make 2% on use tax jobs. 2% more than you're currently making. Okay. So that's in a nutshell, that's how that works. Are there any questions? How we came up with those numbers and why, and how this can be a benefit to you if you're not already doing this. Okay. Let's see. Okay, let me make one point here, okay, that I think is important. In all of the use tax states, you can do jobs like this over here and charge the $700 the tax on the retail charge and remit the whole thing just like this and totally be legal. Okay, at least in the state size you'll be legal. Probably not by the law, technically you're not. But in the state size, when they come out to audit you, if you're in a use tax state and they see you doing jobs like this, guess what the state's going to say? You are doing things perfectly. Keep on going, right? And why will they say that to you? Because they're getting $49 in tax revenue here as opposed to 28 in this scenario. Okay, they're getting a lot more money if you are doing it this way. And they're going to say, if you've been audited before and you're doing it this way and you're in a use tax state and they've said, yep, keep on going, that's why they're telling you that, because they're getting more money than is owed to them. Okay, and legally speaking, if you are charging it this way, you do have to remit the whole thing. You can't charge $49 in sales tax and only remit 28. That's illegal. Okay, if you charge whatever you display or present as a sales tax on an invoice to a customer, that's what must be remitted to the state. Okay, don't let them catch you doing that. So in order to take advantage of this, you do have to change the way you present the invoice to the customer, do lump sums, don't charge sales tax to the customer, and only remit the use tax on the cost of the materials. Okay, so I would just submit that as a thing. Yes, question.
There have been states that have gotten caught.
Yeah, that's a good point. There are states, so there have been times, we live in a state that had a class action lawsuit against a particular vendor, a particular retailer, who was the biggest in our state, by the way, who was doing it similar to this. Okay, they were charging tax and they were remitting all of it, but they had customers that knew the law. Okay, probably, if not current or former, probably employees of the state or people that were in the sales tax department or whatever. They knew the law and they knew that, hey, I shouldn't be paying sales tax on this because it's an installed job. And so they actually sued this retailer, which ended up, the retailer said, well, we remitted all of the tax. We don't have your money. The state has the money. Ended up that the state accepted all of these tax payments, did many audits, and in those audits they said, oh, you're doing things just great. And because all of the tax was remitted from the retailer to the state was actually liable to pay back all of that over collected tax. Now the retailer was caught up in it and they had to change a bunch of things, but the state was a multi-million-dollar tax refund that the state had, and it was, and so, that can happen too. So if you don't want to be caught up in something like that, just do it the right way.
The retailers had to supply the list.
Yeah.
Of who they overcharged.
Yeah.
So they had to go back through every job for like 7 years.
Right. The retailers in that situation had to report back to the state, okay, here's all of the customers that we overcharged for however many years back. And it was a huge, paperwork nightmare. Think of that. having to do all of that. So anyway, just telling you that. Other questions?
What about all the customers that want to see all the line items?
Okay, so if the customers want to see all the line items, if you are in a state that doesn't require a lump sum contract, that's fine. You can show it to them like this with the detailed line items, but you just won't charge them tax. Okay, you'll just do the use tax. There'll be a zero tax on that line, and you're only going to remit. So these things would be, it'd be that this type of a contract, but the materials would be filled in, labor would be filled in, and you present it to them that way. Okay, you can only do that if you're in a state that doesn't require a lump sum contract. Okay, so you do need to make sure to study that part of the law and know whether or not you can present it that way to the customer. Okay. Okay, let me read that one. Where do I go, Chad, to get to the chat? Oh, right here. All right, this one here.
Yep.
Okay, so when the manufacturer becomes the contractor, as in a state contract, so this is like doing a government contract, do they show use tax as a line item, and must they track the different rates per area? So this is a case where the manufacturer of the product is actually charging the state that directly for their materials, I'm guessing, right? I think that's, this is Anita, I think, from Certified, so I think that's the way it is. And so she says, do they show use tax as a line item, and must they track the different rate per area? Probably, yes. Yes, probably. If they're deemed the end contractor, then yes, they would have to do that. And the manufacturer would be responsible for that. So they need to know where that material is being installed to charge the proper tax. Okay. Another one here, can I have a lump sum signed contract, but still have the customer an itemized invoice and still be okay with use tax? But still give the customer an itemized invoice reflecting the totals and still be okay with use tax. Yeah, that depends on the state. Jim is from California, so he is in a lump sum state. Yeah, Chad went through that, right, with some of those down there. What is
You have
your?
to have a lump sum if you're gonna do use tax.
So, and he's saying a lump sum signed contract, but can he also give them a piece of paper that says, okay, here is how it's broken down without a signature on it, you know? And you know, you're probably in a situation there, Jim, where I would, if it were my opinion, I think you'd be okay with that, but you probably ought to have an attorney give you a second opinion on that. Okay, as long as the signed contract is the lump sum contract, to me that feels like that would be okay. All right. Another question here from Ron Clough. What store does he own? Oh yeah, he's a Q-Floors guy. I didn't catch if you pointed this out or not. A few states and two others I've seen, I can't remember, give you the option to print either a lump sum contract or itemized contract and do use tax or sales tax on material retail respectively. But Q-Floors users must decide which way they're going to do it and set up Q-Floors accordingly and print their invoices to customers accordingly. Yeah, yes, that's good. So yes, in those lump sum states, Ron is right. They do allow, it is legal to do contracts this way, to do it the retail way. Just charge the tax on the material charge, the material retail charge to the customer, and remit the whole amount and still be legal. Yes, you can legally do it that way. Okay, so that's a good point. That's good, Jim. Your contracts are all lump sum, so you should, I think you're fine. Get a second opinion. So I'm in California, and this is from David Bone. I'm in California. This doesn't work for most of my clients who want to see all the line items. Okay, so if your customers require it, then you're going to have to do it this way, right? Charge it this way.
If you're,
Comment on that from Chad.
yeah, if you're doing use tax
Mhm.
and show them all the line items, they will know how much you're making on the
Yeah,
material.
yeah, that's true. If Chad makes the comment, if you show them all the line items and you do a use tax, but you'd have to do that down here, right, Chad? Because the use tax would only be over here in the cost window. So, but anyway, so yeah, if you're in a state that is a lump sum state and your customers are requiring you to do it, then you're kind of stuck. You kind of have to do this type of contract. Okay. You know, one of the things that I would say if I were you, David, I would say to my customers, well, I can save you money if we do it this other way, right? There's nothing that says you can't, as a dealer, split this savings with them. Hey, I can give you, 1% better on your job if you allow me to do a lump sum contract, right? And so I can actually save you money if you don't require the detail. So that's another thing you can say. Okay, just my opinion. All right. Did we get all the questions, Chad? I think we did, right? Yeah. Okay, let's move on then. All right, so this is our last page here. So automate your sales tax system. If you're not automated, if you're not using Q-Floor's sales tax report to get your numbers at the end of the month or end of a quarter to pay your sales tax, you need to change. You need to implement our sales tax report. It will save you a lot of time and a lot of errors, okay, if you do it correctly. So I would say, please call us if you need help with it. We can help you set it up properly. And especially at the end, when you have your sales tax report, a lot of people get afraid of that, our sales tax report and how that translates onto the state's sales tax form. Sometimes that's the hardest part, is putting the numbers from our sales tax report into the proper places on the tax form. If you want help with that, I've done dozens of states' sales tax forms with people before, so I kind of know what to look for and where to put things. And if you want help from that, I can certainly do that. I do. That is an accounting function, something that an accountant would do with you or for you. And so if you have me do it, I do charge for that, but you can have an accountant help you too. Once I do it with you once or twice and kind of show you the numbers to look for on the form, or sorry, on the report, and where to put those on the form of your state, you should be able to do that yourself thereafter. All right. So most of the times that's just a temporary one-time thing. Some people have me do sales tax reports with them or for them every quarter. Okay. And so if you do, I'll certainly be able to do it. I just need to charge for that part. Okay. All right. So here's how you automate your sales tax system in Q-Floors. Where possible, if possible, become tax exempt with all of your vendors. Okay. That means try to remember how I said do it all one way or all the other. So if you're in a state that allows you to be tax exempt with your vendors and to pay the tax all at the end, I would say do it that way if possible. Become tax exempt with your vendors, all of them. And then apply the proper tax, the sales versus use to each job, okay? And we talked about how to set that up in Q-Floors so that we do that appropriately. Apply the proper tax rate to the destination city, and we talked about where to set those up by the destinations. You accrue the tax liability at the proper time when the material is delivered, which means you can delay paying the tax until after it is installed. And then you generate the reports that separate sales, taxable sales, and use taxable sales. Okay. And for those of you that haven't used our sales tax reports before, you get to those through reports, sales tax, and Chad doesn't have one. You don't have any jobs. I'm going to finalize one anyway so that you can see what it looks like. Okay. This is what a sales tax report looks like. It allows you, it will give things to you in cash and carry or sales taxable sales, tax exempt sales, and use tax sales columns with subtotals by location, by state, by county, by city. And so this is where you're going to come to get the details for those destination-based tax applications, okay? And we subtotal each of those. So if you looked at a city, it would look like this, and we'd have all the cities subtotaled by city, okay? So you can get different views of your tax report to give you the different details that you need, okay? So that's how you get generate your sales tax reports to pay them either monthly or quarterly. All right. So with that, that is the end of our presentation today. Do we have any other final questions? Okay. All right. Any other questions?
Tip on using the miscellaneous charge.
Oh yeah, let me do one. That's a good point. Let me show you this. This is one tip that Chad just brought up. If you're in a use tax state, okay, you do have the option of putting in a miscellaneous charge in place of sales tax. Okay, so when a job has labor put on it and it goes to a use tax job, you have the option of putting in a miscellaneous charge. Okay, and that goes in the tax box, but it changes the label from sales tax to miscellaneous. And maybe I'll just click on one that has it in there. Okay, so here's an example where you can see there's labor on this job and it's charging a miscellaneous charge, okay, to the customer. You'll notice it doesn't say tax, and you don't want to represent it as tax. But you could explain it on your terms and conditions at the bottom of the invoice that what miscellaneous charge is. I'll just give you some hints. Miscellaneous charge can be costs incidental to installation, shipping and handling charges, and maybe labor warranties.
Fuel surcharges.
Surcharges, fuel surcharges.
Warehousing charges.
Yeah, all of those things, handling. Yeah, that would be a handling fee. So any of those types of explanations you could use to say this is for these types of things, okay? Now, if you notice on a miscellaneous charge job, you might have it, in this case, at 4%, where the cost of materials and the use tax is only $9.71. So not only do you save money in not charging sales tax, you could also earn extra money by doing a miscellaneous charge, okay? And if customer questions you on it, and you will have 5% of your customers that question you on that, you can either take it off or try to explain it. Try to say, this is for our labor warranty. We have a lifetime labor warranty on all of our carpet jobs. We'll come back and restretch and repair carpet for the life of the carpet as long as you have it. And that we offer this extended warranty with this miscellaneous charge. Oh, you don't want that? Okay, we only have a 1-year warranty then on that. So you can take the miscellaneous charge off, write on their invoice 1-year labor warranty, and most of that 5% of the customers that actually question you will say, oh, no, that's okay. I want the labor warranty, the extended warranty, and they'll just go with that. Okay. So anyway, that's just some hints as to what you can do with miscellaneous charge to help you even earn a little bit more money in that area. Okay. All right. Well, that concludes our webinar for the day. Thank you for everyone for attending. Talk to you later.
Hey, hold on.
Yeah.
One more question.
Oh, one more question.
Can you state that miscellaneous charge is for use tax increase?
Good question. The question is, can you state that the miscellaneous tax, or sorry, that the miscellaneous charge is for use tax or to cover use tax? In our state, you can't do that. I don't know about other states, but they've specifically said, no, you can't represent that miscellaneous charge as any tax at all. Okay. Don't know why. The state just wants to charge you tax and not be able to represent it to the customer, but that's what the way it is in our state. So you'd have to get a legal opinion on that. But my sense of it is that you probably ought to stay away from anything that has the word tax in it, because a customer, if they were to interview customers and say, well, what did they tell you this miscellaneous charge was? Well, they told me it was tax. Tax was included in it. And that they can construe that as sales tax, or at least in their minds, they're thinking sales tax, and you don't want to get into that situation. So I would stay away from the word tax when explaining miscellaneous charge. Okay?
Would the miscellaneous fee be taxable?
Will the miscellaneous fee be taxable? No, because remember, you're in a use tax job. So whatever charge you are charging to the customer, none of it is taxable, right? If you think back to our thing, there was no tax to the customer that was charged, and you're not doing anything. You're only paying use tax on the cost of materials, and there is no cost associated with the miscellaneous charge. So the answer is no. There is no tax that you have to pay on the miscellaneous charge either. Okay. Good. All right. Those are all good questions, and it's good to talk to you. And good luck with everything. Again, if you need help with anything, any of these things, call our support. And if you need my help or Ron's help, Ron and I can help you with sales tax reports and sales tax forms. Okay. All right. Thank you.